Hello and welcome, CTKS family and elite service members. If you think that crypto is manipulated, you're not wrong, but not in the way that you think. Because while the crowd chases tweet, influencers, news, and clickbait, seeking to understand why things happen, smart money already knows exactly where price is going. And today, I'm going to show you how to follow them, not by guessing, not by gambling, but with the CTKS method. This is how you outsmart the manipulators. Let's dive in. When you look on social media, anything that doesn't go with an upsurge is obviously manipulation. The other thing to be aware of is recency bias. So when price comes down, people will be looking at bear markets. When price goes up, people will be looking at multi-million-dollar targets. What we've seen is supposed manipulation down. But what about this? What is that? That is also manipulation, another example of manipulation. Of course, we don't subscribe to this as elite members, but you must be aware that social media has a narrative. And that narrative will continuously change based on what price is doing. If price is going green, it's going to the moon and beyond. If price is going red, it's going to zero. This will drive you absolutely and utterly insane. There is a better way. This brings us to the natural question, what is market manipulation? And according to Wikipedia, market manipulation occurs when the supply and demand of a security is altered to influence its price. That can mean spreading misleading information, executing misleading trades, or manipulating quotes and prices. Therefore, that sell-off cannot be explained because manipulation can't be explained. If price is manipulated, there's no way to explain sell-offs inside the market, no way to explain rallies inside the market, no way to explain topping patterns or consolidation inside the market either. But what if I was to tell you that everything that you see here is preordained and destined? How could that possibly be? We've looked into social media and the people with hundreds of thousands of followers are saying this is manipulation. But what if it wasn't? What if it was just natural market movements between structural levels? Now, we can see when we mark up our chart with level 1 and level 2 standard certification, we get these areas. You can see around this 93,000, there are a lot of structural overhead areas that price came up and into. The sellers were simply too strong in this area. They pushed it down to the next structural area, which was at 91,000. And there was one more structural area at 87,880. Now, what happened? Price came into structure, the sellers were too strong, they pushed it down into structure, we had a bounce, a retest, it didn't work, structural target to the 87,880, which hit, and then back up to structure. Because you are an elite CTKS member, you know that when it hits structure and it does a structural failure, structural failures structurally target the next area of structure directly below, which was here at the 93,000. This structure was here at the 91,000. That's where it came down to. It tapped it, it bounced. It tried to get above, but the sellers were still too strong. We made a series of lower highs, which meant that negative downside action and a retest of the 91 and a possible break of it was very likely. And we got that break. So when you understand the price is just literally like a ping pong ball, ping ponging between structural levels, it is absolutely a game changer. Therefore, we have a choice to make. We can think that something is manipulation, and it's a very commonly held view across crypto Twitter. Those dotted lines, in case you were wondering, are just marked up with level 1 and level 2 standard certification. If we're getting structural failures because the sellers are too great in number and too strong, we're going to get structural failures down to lower structural levels. That will create negative price momentum on your monthly structural models, and on your long view forecast models, things will go negative. This is not manipulation. I can tell you that row 1 and row 2 explain exactly why Bitcoin came down, but that's something for another video. A lot of people will say it's low liquidity or it's manipulation. It's structure, and it always has been. Crypto, it's not manipulated. It's an exponential asset class. And because it's exponential, it moves very, very quickly. And it doesn't have the liquidity of the main markets either. So that forces it to move around quite violently, exponentially. That's why, if you understand where the structure is, that's a real lifesaver. Because you've made it to here, just one thing to bear in mind, the VIX is very seriously overextended to the downside. Now, if you're a masterclass student, if you're a profiting masterclass student, you'll know the potential for a turnaround is increasing with every single day. And the FOMC meeting is coming out in 2 days. Please be aware of volatility. Take care, my friends, and Kate and I will see you again in the next video. Bye for now.